Good afternoon, all. CamelbackTrading.org coming to you this Wednesday afternoon, September 30th, looking at the SPY ETF's market profile here on Window Trader. And what a finish to the quarter. As once again, and I'm telling you, this is starting to rear its ugly head. Twice yesterday and again today, where headlines and tweets are coming to the forefront and agitating these algos. Yesterday they agitated them twice. Today they agitated them in a big way, which went from the high of the day to making a new low on the day. We got above the 2-day balance. I'm going to call this up. I was hesitating whether I want to call it 3-day balance. I'll call it up. I'll give the buyers the benefit of the doubt. We did, however, close below the 50-day moving average for 3 days in a row. You'll see that when we get to the charts. We had an open and drive up. Bulls took control right from the start. It looked like early pre-market. We were trading below yesterday's low. By 8:30, after GDP came out, we were in the middle of it. Boom, straight up. Now, we did get below the opening once in L, but briefly stayed there. I did not make a trade after I got out of a long in J period. I had a fantastic day. I really did. I had a really good day. I had an excellent short, excellent long that I escaped with my life. I'll go over that in a minute. We end 8 wide. We just missed 9 wide. L missed H's low by 3 cents. Our reference points and destinations are far and wide apart, which are going to create incredible volatility to start the fourth quarter tomorrow. The room stayed out of trouble. I tell you, and look, I didn't trade after J period. I told the room, there's probably people out there trading, going nuts, trading KL&M. And this is how I explained it to them. I said, I trade for a living. Every day, every hour, I'm here, right? Been doing this for my whole life. I don't care if I miss 3 time frames. Once the algorithms get agitated, I'm not sure what they want to do yet. Yeah, it kind of became pretty clear after K, that we're 1 time frame down, but I still didn't know that. We kept going back almost to park. Easy to say, I should have been short here, long here, and I'm sure a lot of people are saying that. But this is how I tried to explain to the room. I had an excellent day today, and I didn't get caught up in any of this. And I'm experienced. Do you realize how many newer traders or inexperienced traders, right? I'm looking to trade for my life, right? Who cares if you miss 3 time frames? But if you're a newer trader and you get caught up and you get caught on the wrong side of this, you could end your career in 3 time frames or 1 time frame for that matter. Let that sink into your head. Don't let your career end on 1 time frame. Plain and simple as that, right? It's the money you keep, not what you make. I think I call the market very well. But once these things get agitated, let them do what they want to do. I don't care. So if that's one lesson you learn watching this video, I hope you take that to heart. Now, as far as today went, we opened, drove straight up, right? My first play, now I scalped 3 put plays in A period, even though we drove straight up and made money on all 3 of them. I shorted, I did the 335 puts. I did it initially against the afternoon rally high, popped it, came back in, and I'm telling you, I was doing 15 to 30 contracts for literally seconds to a minute at a time. Why wasn't I taking longs? Because I wasn't sure what this market wanted to do, even though you don't know it's an open and drive right away. It certainly turned out to be one. But I was more than comfortable doing it. We had unchanged value at the time. So I scalped shorts there, and I did it again at the high. Why? Because we know they don't want to take out the high right away, these short-term traders. So twice I did it against C's high and yesterday's high, and did well with it. Now later in the time frame, when we ripped above, I told the room, game over for that. I'm not looking for that short. Now, we had a lowest accepted price at the time. That obviously got taken out when all the afternoon went to hell. B open, boom, exploded to the upside. I just watched it. Didn't know what I wanted to do yet. I was waiting for it to pull back. I thought the higher it went, I would actually look to take a put play because, again, I didn't think we were going to have a huge set of single prints. Well, that didn't happen. Didn't pull back. I watched B, I watched C. Now, even though we had these single prints at the time, We had a chance in C. They filled. So I was actually looking. This reminded me of exactly last quarter's day when D took out C's low and I took a short and then it went in my face and I got hurt pretty bad. Well, I did take the short again. And it did go against me. I took the 337 puts, but I knew to get out of it a lot quicker today. And I took a small loss on it. So I certainly didn't give back what I made on those 3 shorts in A. And I got out of it and I said, time to reassess. So then I went long in E period. I was like, okay, we had singles again. I wanted to see if we got down to make us 4 wide. I took a little heat with it when I first bought them, added to it. It went back up, took them off before we took out, went back to really ease high. It was a nice play, 335 calls. Okay, now H period. So we have singles, but we had a chance for C, another chance for D. Both failed. So now I'm like, I don't mind fading. I didn't fade F and G's high, but once H opened and it looked like it was getting tight and having trouble getting above D's high, before we even stopped the one-time framing down, now no doubt this was an innovator play, but I was comfortable with it. I took 3 shorts of 30 contracts each time we got to around D's high and took them off before we got to G's low. I did the 338 puts 3 times, which paid me handsomely. Actually, I take that back. I took 20 to begin with. They went against me initially. Then I did 3 lots of 30 that paid me handsomely, and then the 20s did. And then I told the room, I just made some really good money on 110 puts. Right? 3 lots of 30 and a 20. I made between 7 and 15 cents on all of them. That adds up, my friends, on 110 contracts. And then when we took out G's low, I said, well, this is what I was finally looking for. And I bought 50 of the 338 puts and wrote it down. I was like, okay, I think we're good here. I didn't know if we were going to get to B's high. Now I'm looking for an afternoon pullback low. Took them all off the balance right around B's high. Beautiful trade. Well, at the time, it looked like that might be our afternoon pullback low because then H went up and I went up. So then when J, and here's my last trade of the day, when J exploded to the upside, now the ES filled their gap from the 17th. But remember, we had our dividend that day from before, so we were lower, so we still hadn't filled ours. So when J pulled back, I bought 30 calls. When Jay pulled back some more, I bought 40. I was long 70 calls. And then right before that headline came out, they rallied almost to the high, got out of all of them except for 7 of them. I was like, I'm just going to hold on 7 and see if we get the gap. We only had about 20 cents. So thank my lucky stars, I was only long 7 when this thing just fell out of bed. Because I ended up losing on 7 contracts 50 cents. So I only lost $350 on those 7. I made a lot of money on the 70. If I was long those, if that came out when I was long 70 here and they flushed, I would have been dead. Because not only would I have not made the money I made really nice money on those 70, I would have gotten crushed on that position. I don't use stops because bottom line is on options, when that went down, the next thing I saw, they went from trading at $1.40 or $1.50, wherever I was, to trading at basically 90 cents, which is where I got out of those 7. But for newer traders and whoever trades the ES, you have to have stops. Foolish if you don't. Plain and simple. And then I didn't take a trade the rest of the day, like I said. Just watched it. The one trade I was looking to take possibly, if M took out L's low, got below the opening, and then came right back above it like L did, then I would have taken a long to see what we got out of it. Never happened. I'm actually surprised we took out L's high. For my money's worth, all this is, after the week longs got out, K, L, and M, all this is shorts pushing it down. So when we took out L's high, I thought we might get a little more. I was a little surprised that they flushed out again. So we'll see what happens tomorrow. All right, destinations for tomorrow. Upside. Far and wide apart. We closed at 334.89. My first upside destination, is today's high, 338.29. So $3.50 higher. Now, obviously, we're going to get a lot more market-generated information, right? We're going to get the overnight high. We do have 7 wide here. That's visual. But for firm destination, as of right now, it's today's high. And filling the gap at 338.52. And then above that, it's 339.26 price probe from September 16th and 340.31 price spike from the 16th. For the downside, we closed at 334.89. My first destination is today's low, 332.88. So our first destination is $2 to the downside. And what did I say to the upside? Whatever to the upside, $2.50. Wide and far apart. Then below that, we have 331.62 daily low, and then filling the gap, 331.20 weekly gap, and 329.58 daily gap. And then you should have all the other things I gave you this morning on the single prints. So expect major volatility to start the fourth quarter. Charts. Monthly. Well, we absolutely closed above last month's low, so we're firmly in balance. We look like earlier today we might actually get a run for February's high, right? We didn't get too far from it before it fell out of bed, so we don't get that. So a 2-month balance, basically it's all of September's range. It's a nice $39 balance about. Weekly balance. Gap is still my main focus with 2 days to go. Right? Next target on the weekly is that 343.06 high. And then on the daily, this is the interesting one. Look at this. Look at the 50-day moving average, right? Now, I'm not a fan of being a big proponent of that being resistance, this and that, but I know traders look at that and take that, and they look at it. So I certainly have to know where it is, right? Well, we are now, I'm calling it up, whatever you want to call it, right? You can call this a 3-day balance, you can call it up. The bottom line is we're having trouble getting above the 50-day moving average right now. Is today 3 strikes and you're out? I don't know. We'll find out tomorrow. Right? If we get above it, we should go for for today's high. If we don't get above it, well, there's a good chance we're going to take out these 3 lows, get that weekly gap, and then attack the daily gap, and then we're back in this 5-day balance. Right? That's how it works. This is still short-term traders. We did 100 million shares today. Very nice volume. Average volume is 85. We still have the after hours. We're up at almost 101. So the volume's very good today. Expect volatility. Put stops in. Come join CamelbackTrading.org. I don't know where you're going to get what I'm giving you for $20 a month with this play-by-play all day and seeing my profile stream all day. We're at just under 200. Remember, when we get to $299, that $20 price is gone forever. Goes to 30. So get in while you can at this dirt low price. I hope you had a great day trading today. Have a great night, and we'll speak prior to the opening tomorrow.